COVID was telling the business world, we're going to accelerate the move online. Everything you're going to do over the next 10 years, you're going to do this year, and it'll be that way forever. We get to TeleDoc earnings, we find out forever is not that long. All right, welcome to the Drill Down Earnings. I've got the latest earnings report from TeleDoc. Interesting quarter, maybe not a great one, but here's the business story behind this stock on the move. I'm Cory Johnson, Chief Market Strategist for Futurum Group. TeleDoc, why? Look, it was a COVID darling. And we thought, COVID was telling the business world, we're going to accelerate the move online. Everything you're going to do over the next 10 years, you're going to do this year, and it'll be that way forever. And thus, we get to TeleDoc earnings, we find out forever is not that long. Because this is, look, Wall Street likes a beat or a miss, and this was a miss, not a big miss, but the guidance sure was. We dig into the business here, of course, not just the miss or the beat. Here's what the business did. The business did $661 million in the quarter, up about 4% on a year-over-year basis. The losses persist at $29 million, not really comparable to last year because they took a huge write-off last year, an impairment, but a little bit better than the loss last year, even after that impairment. I'm not going to do a non-GAAP thing because it doesn't really matter here. But look, let's look at the business beyond those headline numbers. The big business at TeleDoc is BetterHelp. BetterHelp, an online therapy thing, which has actually done really well for them. It had been really strong. If you look at the annual numbers, BetterHelp did $1.1 billion in revenues and growing at about 10% on an annual basis. But boy, that growth really slowed down in the fourth quarter. And the margins for that business, they were great in the fourth quarter, but for the year, they tend to be worse than the customers that are full-service medical patients for TeleDoc. But nonetheless, that business had been growing at a really strong basis and no longer growing so well. Why? We'll dig into that. Two problems in that business. It's not growing as well. We'll talk about their difficulty in finding people who want to see a shrink online, but also they're having trouble finding the shrinks online. There's a shortage of supply there, TeleDoc dealing with that. So when those numbers came out in their guidance suggesting that things are going to be a lot worse and the growth is slowing down, wow, the stock got walloped in after hours, going from about $21 a share all the way down to $16 a share. And indeed, the stock down from about 30 to 20 before all that happened. So if you look for the year from 30 to 16 now, that's about cut in half. I'm going to give you a rare look at the long-term 3-year chart. Oh my goodness, what a painful time for the big believers like Kathy Wood of ARK Investors, who thought the TeleDoc is the future. It might be the future, but it sure isn't the present when it comes to how the stock has performed. So why is it so hard to find people right now? Social media. The company advertises on social media. Social media rates are up, and they're having trouble buying. Yeah, social media is a problem for this company. The irony there, right? Social media makes you crazy. And so crazy, apparently it's going to keep you crazy because they can't buy the ads for BetterHelp. Okay, that's not really a kind way for a psychiatrist to talk about these things, but I'm not a psychiatrist. Big believer in therapy. I'm all for it, but BetterHelp having trouble finding people who want to seek therapy online because of the prices in social media. Here's the CEO, Jason Gorevic, I should say, trying to explain why it's hard for them right now because social media pricing is so difficult.
What drove that was weaker customer acquisition trends in the second half of the year. There are a bunch of factors that go into that. In particular, we saw pressure on our customer acquisition costs in social media channels. We're fortunate. I guess the good part is we have a diversified set of channels, and the higher our overall spend levels as we get to higher levels, the more we press on sort of across all of those channels. So we felt the impact of that in the second half of the year. As we made our outlook for this year in 2024, the assumption is that those higher levels of customer acquisition costs persist.
So social media advertising costs are high for BetterHelp, and they're going to stay high for BetterHelp, and that leads to this worse guidance. All right, what's your big earnings takeaway from TeleDoc, and what's one number that tells us a whole lot about this quarter? I'll have all that right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Here's a quick drill down earnings take on the latest quarter from TeleDoc. This is the company that gives us better health. Not a better quarter. I mean, better 4% improvement over last year on top line numbers, less than Wall Street expected. The stock getting clobbered as a result. And it's really about guidance, telling us that things are going to be worse than they had been. And our one number that tells us a whole lot does indeed tell us something about that. The drill down earnings bite shows us negative 1%. That's your year-over-year growth rate. That's not growth, that's shrinkage. The BetterHelp segment revenue of $276 million was down 1% from the previous year. Not what you want from a growth business. You want growth. Not getting it with BetterHelp. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Check us out on Instagram and on TikTok. Check out our full robust earnings on YouTube. Follow me, like, subscribe, and comment. The Drill Down Earnings, part of the 6-5 Media Group.